Hello and welcome to this very special show, It's the Economy. Today on our radar is the auto sector. There's been a big slowdown in the sector. Inventory levels have been sky high. In fact, in some spaces like two-wheelers, inventory levels are as high as 100 days. Automakers have indicated that production could be cut by 20 to as high as 50% in the two-wheeler space. Now, not just two-wheelers, even four-wheeler players have been facing the brunt. Maruti, in fact, has decided to cut production by 25% and also up dealer margins by as high as about 8,000 rupees per product in order to aid the dealers. Not just that, in the two-wheeler space, costs are going to get higher as we go ahead because of the new ABS norms. All of that will put further pressure on demand. We did get a chance to speak to Rajiv Bajaj of Bajaj Auto to find out how grave the situation is on the ground. Let's listen in.
Just give us an idea of the industry, not Bajaj Auto. Is the sector now absolutely chock-a-block with inventory?
The short answer, I think, is yes. We are all aware that growth rates really dropped off since October. The reality is that most people did not anticipate this or chose to ignore it. And that is why what you said is absolutely right. Inventory for some is actually, I think, in triple digits, 100 days or more. They may or may not acknowledge that, but that is the reality. And in terms of production cuts, typically I hear of some of the big makers effecting about a 20% cut. And don't be surprised if on 1st or 2nd April you find out that some of the big ones have cut back by as much as 50 or 60% in March. Will
Bajaj Auto be cutting production at all?
Happy Holi, Sonia. The color of Holi seems to be black and blue for us this time around. No, for Bajaj Auto, I can say very confidently we are in a good position. I think this is basically for three reasons. A, we did not crank up production and therefore inventories as much as the others did pre-festive. Secondly, we preferred to be safe than sorry, and therefore we had a strong promotion lined up for the festive season, which kept our retail momentum very strong, and that continues to be strong. And I think most importantly, we anticipated this scenario and had a very clever strategy in place to address three very clear segments of price entry and premium with three brands, CT, Platina, and the Pulsar. And we worked on them on all three important or four important aspects, I would say: product, price, promotion, and distribution. As a result, we are at 55 days of inventory right now. I can tell you very specifically, our retail this month may be 200,000 or a little more. The stock is 375,000, so that's about 55 days work. And we have two choices because we are not happy with 55 days of stock. We can either reduce stock to 45 days by reducing the inventory, or we can push up our retail. And I think we are going to push up our retail. You will see it moving up. I am very confident in the next 2-3 months to 250,000 or thereabouts. And then we will be absolutely comfortable at 45 days of stock.
So from the 1st of April 2019, we were discussing this earlier as well, the prices of bikes will go up across the industry because of the new ABS norms. Will that impact demand further, Rajiv?
I think so. What's going to happen is for motorcycles up to 125cc, where we are a smaller player, I think prices will go up by approximately 1,000 rupees as a combination of CBS and the registration plate. For motorcycles above 125cc, where we have larger stakes, this will be somewhere between 7,000 and 10,000, depending on what exact solutions of single channel or twin channel ABS manufacturers choose, and whether they choose to just pass on the cost or put their margin also on top of it. So that would be the range. I'm aware that people anticipate this to impact Bajaj more because we have close to 50% share in that segment. But I can tell you, we've thought this through very carefully. And you will see from April that we have a very smart strategy in place to counter this. There will be no let-up in our volumes or in our share. We will maintain our bottom line because we have a clever product strategy in place for this.
That's good to hear. But now, Rajiv, if we can just look a step back and look at the well springs of this problem. Is this all about insurance, NBFCs not funding, that kind of problem? Or is there some kind of a slowdown in the economy? In that case, it'll take a little longer to mend.
I think, first of all, I have to say I'm not an expert of this, but I would be on safer ground if I were to say it's a bit of both. And I'll tell you why I think so. These three factors that have been talked about ad nauseum the last few months. One is the liquidity, one is the insurance, and also the fuel price hike, I would add to that. These three factors have definitely played a role. Having said that, the reality is that these were well known in September, and CEO after CEO and marketing head after marketing head have appeared on your channel to say that we've taken that into account, but we are going to have a bumper season because of whatever reason. So either people have underestimated the impact of these factors, or perhaps, these are secondary. Perhaps there is an actual underlying malaise which is more responsible for the problems that lie before us. And I suspect the latter is true, and I'll tell you why. Because I see it in the changing structure of industry. I see the fact that in the last year or a little more, the entry segment, which was under 20% of industry, is now close to 35%. Why have people become so sensitive to operating expense of a motorcycle that the entry segment has doubled? Why has the mid segment of 125cc motorcycles dominated by Hero and Honda, which used to be 27% of the industry as a segment share, dropped to 18-19%? Why is it in the sports segment, a 350cc motorcycle isn't as hot as it used to be, but a 150cc Pulsar has grown by 60% this year? So I think if we just, stop doing this economic guesswork and look at the shift in the segment of the industry, which to me is far more relevant, it speaks very clearly for the fact that people want to buy something that's a little cheaper.
But these are
actually, you have a nose for the economy much more than many economists, Rajiv, I must say. I mean, this is consumer downtrading.
Yes.
No two ways.
And now, if a bike is going to become costlier by almost 8,000 rupees because of the new norms, I don't know how customers are going to receive this. But what will all of this do to growth, Rajiv? The two-wheeler industry has grown less than 7% if you look at it from April to February. Are we looking at single-digit growth this year? Of course, that's the expectation. But even next year?
Well, as you're aware, Sonia, the last, since October, second half is actually negative. So anything positive, I think the industry would receive happily and gratefully. Having said that, it's going to now get, camouflaged by this apparent move by some of the big makers to temper their dealer stocks, because if they are going to drop production and therefore billing or primary sales to dealers by as much as 15, 20 or even up to 50% as someone is probably going to do, then the industry is going to actually show strong negative growth, at least till June, because I suspect the marriage season of April, May, June people will lean on that very heavily to liquidate stock. So I don't know what will happen for FY20 as a whole for industry, but the first quarter logically should be strongly negative.
Well, that's the word coming in from Rajiv Bajaj, but we also got a chance to speak to a whole host of dealers as well as auto ancillary players. You heard it from the automakers like Bajaj Auto on the big slowdown underway. We also spoke with a whole host of auto ancillary players like Rico Auto and Minda Industries to find out whether suppliers are also cutting production in line with the OEMs. Listen in.
Mr. Bora, first to you. What are you noticing? Is there more downtrend in the four-wheelers or more in the two-wheelers? Just give us more color in terms of demand and pickup by the OEMs.
Yeah. Hi, Lata. I think from a demand perspective, we heard what Mr. Bajaj said, and we normally have no business to second guess what our customers say. And we all know that the second half of the current fiscal from October onward has definitely been under pressure. But what we have been doing is, in addition to adding more products and more premiumization, we have been able to withstand that pressure. Even if we see from industry perspective, while the second half has been broadly 8 to 10% lower, we have been able to maintain our revenue. And going forward, we are all echoing what the customers are saying, be in terms of four-wheelers or two-wheelers, that up to June, at least there are no signs of strong revival. We are tightening our belts. The focus is mostly on quality, delivery and development. And we are continuously working to up our portfolio in terms of offering to the customers, which is now we are adding sensor plant, we are adding the alloy wheel plant. Recently, we have acquired a seating company called Harita Seating. So we have been trying to withstand this tough time. We all know that the long-term story for the country is intact. We are very heavily, I would say, not that extent of penetration in terms of four-wheelers. So we believe that four-wheelers may actually see more growth going forward as compared to two-wheelers. But both the businesses we are confident will grow. The Indian economy, we know, is heavily dependent on auto. The GDP share of the automotive sector per se is roughly around 8%. And we know that the automotive vision which the government has laid down till 2026 to increase the share from 8% to 12%. So we are very highly optimistic. While this is a rough patch, we continue to work on to see that we deliver more than what the government is expecting and what government roadmap has laid. So we are confident that our growth momentum will continue. In terms of 1.5 to 2x is our stated objective from what customers grow.
Okay, so no signs of a revival until June, but after that things could get better. We have Arvind Kapoor of Rico Auto who also joins in, and Rico Auto supplies to customers across two-wheeler, passenger cars and commercial vehicles, whether it's Hero, Maruti, the Tatas of the world. Mr. Kapoor, what is the situation on the ground currently? Rajiv was telling us about how there could be a 20% production cut by the OEMs. We're looking at 100 days of inventory as well. Will companies like Rico Auto also cut production? And if yes, by how much?
See, this all depends on the customers you are dealing with. If you are lucky to deal with a customer like Rajiv, then of course your sales are going to go up. And if you are dealing with the other customers, there would be some impact. And like we have committed lines for various customers. So those lines are flexible lines. We do switch from one component to the other component for other customers as well. Now, having said that, we are in a fortunate situation that we are exporting, and in the exports, the market is okay for us. And in fact, we should be growing by almost 20% as far as exports are concerned. And in the domestic market, the push that is happening now is to get a larger share of the business, and that's what most of the component makers are vying for. But I'm sure some of the suppliers who are dependent solely on one customer, one OEM, they would be reducing their productions in line with whatever the OEMs are doing. That would happen certainly.
Okay.
But auto is a long-term game, not a short-term game. It's not that every quarter to quarter we got to monitor. What we invest today is probably for the next year, and that's how our OEMs are actually demanding from us.
No, actually, one understands, of course, cyclicality in all industries. But what we are trying to smell is this something like we saw in the late 90s and early 2000s? Or this is a much smaller bump? What would your best guess be, Rajiv?
Best guess, Rata, is that it's a smaller bump because I think the larger part of it is self-inflicted. With some people, really having unrealistic expectations of the festive season and not doing enough on the ground to promote retail while piling stocks into the channel. And then, as is typical, being in a stage of denial for a couple of months and then the water is above the nose. So I think if that had not happened, we would not have seen this kind of, huge peak and then this huge trough that lies before us. So I would like to believe that things will be calmer after July and that this is a smaller bump.
Okay. Well, you're a big export guy, Rajiv, and we just heard Arvind Kapoor also saying that the export market has actually been the relief for him. It should be much more for you. Are things much better outside than inside India?
Yes, at a time when we could not export, my friends like Arvind Kapoor were our inspiration. Okay. And yes, I can give you some numbers if you like. Last year, in the last financial year, we finished at close to 4 million vehicles total, which was about 1.6, 1.7 was the exports. You may remember at the start of this financial year, we hesitated to give a forecast because we were really unsure. But now we find ourselves in the closing days of March to be within a kissing distance of 5 million vehicles, so 25% growth has been outstanding. Exports just crossed 2 million vehicles earlier this month for this financial year, so that's been outstanding. And going forward, I can share with you that we are looking at about 15% growth in exports to about 2.35 million vehicles. On the domestic front, similar growth rate on three-wheelers and the four-wheelers, so hopefully close to 450,000 vehicles. So that's about 2.8 million, and an equal number from the domestic motorcycles. So all in all, we won't get within a kissing distance of 6 million next year, but we'll get within a hugging distance of 6 million next year. And I have to say 15% growth for next year doesn't excite me. But when you look at it in contrast to 15% degrowth for the industry, then I'm not too unhappy.
Okay, well, that's a very optimistic projection. Rajiv, before we let you go and we go back to Sunil and Arvind, wanted your thoughts on what's happening with this whole theory of pre-buying ahead of the new norms coming in. Because about 5-6 months ago, that was the talk that there's going to be this big wave of pre-buying before April 1st, 2019 and the new norms. But none of that actually played out.
Because there is a fundamental difference between what happened with BS4, which will also happen with BS6 next year, and what is happening now. The difference is this, that both with BS4, for which we take some credit, and with BS6, what has already been announced is that as of 1st April of 2020, for example, you cannot sell anymore a vehicle which is not BS6 compliant. This means that from October or November, manufacturers will start having to turn over from BS4 to BS6, and prices will go up as a result. And therefore, consumers will, it is expected, pre-buy, because they would rather buy the cheaper BS4 stuff than pay 5,000-10,000 rupees more for BS6. So this is as far as emission norms were concerned in 2 years ago or are concerned next year. As far as 1st April this year is concerned, it's only about the safety-related regulations, as we discussed about CBS and ABS. And here, this condition that you cannot sell after 1st April does not apply. The condition is that you cannot manufacture after 1st April. And therefore, there is no pressure, back pressure on manufacturers, and there is no reason for the consumer to rush out and buy in March, because he can still get a non-CBS or a non-ABS motorcycle for up to June, because manufacturers have 90 days of stock.
Well, Rajiv Bajaj, it's a pleasure having you with us as always.
Thank you, Lata.
One wishes that you will take to our camera as happily as you take to your phone, and we have an on-camera chat. But have a great Holi.
Thank you. You too. Thank you.
Okay, Mr. Bora and Mr. Kapoor, if we can keep you for a minute more. If you can tell us how, you said that maybe up until June you're not expecting things to improve, Mr. Bora. But can you tell us how deep the cut is? Do you expect that, production is going to fall by 25%, by 20%? And how, will cheaper finance? Definitely there will be rate cuts. Definitely the cost of money is likely to fall a bit. Will that be enough to kickstart after June?
So, Lata, if we see on a full year basis, we believe that the long-term story is intact. If we see our 9 or 11-month numbers, the four-wheeler segment has still grown by roughly 1 or 2%. Two-wheeler segment has done a lot better, ranging from 8 to 10%. And there are players who are in the double digits, like Bajaj, which we spoke about. So the long-term story is intact. As we said, normally we don't second-guess our customers, but if the impact what we are seeing, if you see from Q3 to from Q2, the general volumes have been lower by in the range of 10 to 12%. And that's what we are expecting the next couple of quarters to continue before we sort of see some sort of revival because of maybe funds availability, as you said, or in terms of getting stability in the economy, etc. So I think as an industry, we are all hopeful that from June, July onward, things should start looking better.
Okay. Arvind, the last word from your end then. In terms of FY20 growth, a lot of auto ancillary players told us that FY19 is written off because of how the last half of the year has panned out. So in FY20, are you looking at a double-digit growth at all, or do you think it will be single-digit then as well?
There will certainly be a growth next year, and to your question to Rajiv on pre-buy, I think next year you will see the impact. This year you might not see it because of safety, the safety items which are being introduced. But next year certainly you see the impact because the price differential between Bharat Stage 4 and 6, there's a difference of about 6,000 to 7,000 rupees, as what Rajiv is saying. And there is going to be an impact as far as the customers are concerned. And you'll see both the vehicles in the market in the month of, say, I would say September, October, November onwards. So there would be a comparison and people would actually make a choice there. So you'll see a lot of buying there. And I see a growth in 20. And I think we should be around 8 to 10%. That's what I would estimate as far as two-wheelers are concerned. In the car industry, I would also estimate around 6 to 7%. That's what we have factored. And the exports should also do well. That's what we are factoring. The diesel is going to collapse. That, of course, is the other thing that we are factoring. And whatever investments are there, we are diverting those investments into the gasoline and or electric vehicles. That's what we are doing. But we see a growth in 2020, and we are investing accordingly. And besides that, we also have, like I said, the export orders and for more items and more components with large customers. And I think that would also see our growth taking place next year. So we are targeting almost 20% growth next year. This is our, as per our own budget.
With that, it's curtains down on this special edition of It's the Economy. Thanks so much for watching.